In 2025, 42% of global fund managers picked gold as their top inflation hedge, up from just 23% a month prior. Now ask yourself, what else can survive economic collapse, TikTok fads, and a bad haircut? In a world where everything loses value, these 5 investments don't flinch. So let's start with the OGS of stability. And you tell me if you're not ready to move your money like an actual grown-up by the end of it. 5. Gold, the original drama-free king. If investments were high school stereotypes, gold would be the quietly ripped senior who's seen it all. As for recessions, he's been through 6. Currency collapses? Yawn. And bank failures? Try again. Gold holds its value, and it does it while watching other assets lose theirs, sipping tea from a vintage chalice. The reason gold remains undefeated is that it's built on trust and scarcity. It's been used as currency since 600 BC, and it's still respected as a universal symbol of wealth in pretty much every culture. Yes, even the ones who don't care about Bitcoin. When inflation spikes or stock markets nosedive, people turn to gold like it's their ex who always gave great advice. And it's not just for old-school investors. Central banks are hoarding it, countries are building reserves, and billionaire prepper types are literally burying it in vaults in the Swiss Alps. There's no CEO who can tank gold's value with a bad tweet, no boardroom scandal, no quarterly earnings report. It just sits there, shiny, solid, secure. Here's a fun nugget. If you melted all the gold ever mined, it'd fit into a cube about 70 feet on each side. That's it. All the wedding rings, all the coins, all the grills, and Olympic medals. 1 cube. That's how rare it is. So if your retirement plan includes hoping your company stocks rebound, eventually, maybe it's time to give gold a call. It won't promise crazy returns, but when the world is on fire, it's basically a fireproof vault. 4. Real estate, the OG passive income generator. Okay, let's talk about dirt, literal dirt. Owning land has been a flex since humans stopped hunting woolly mammoths. And while we've evolved a bit, now we just DoorDash the mammoth equivalent, the principle remains. Land is power, and property is wealth. Real estate is that investment your parents told you about at dinner while you rolled your eyes, and then later Googled with mild panic when your rent hits 70% of your paycheck. Here's the truth. Real estate not only holds value, it often multiplies it, especially if you buy smart, hold long-term, and don't panic every time interest rates wiggle. Property appreciates over time. People will always need places to live, work, eat tacos, or open wildly unnecessary candle shops. And if you own one of those places, you're not just building equity, buddy. You're getting paid to let someone else pay your mortgage. The math isn't complicated. Buy it, rent it, and hold it. Cash flow plus appreciation equals a financial glow-up. Moreover, real estate has created more millionaires than any other industry in history. That means more than meme stocks, more than those dubious day trading courses on YouTube, and more than your friend's 4th startup that still doesn't have a product. And let's be real, real estate also gives you options. Rent it out, flip it, Airbnb it, live in it, brag about it, leave it to your kids, or just visit it like a proud investor tourist. Stocks don't let you host barbecues on them. Duplexes do. So ask yourself, do you want to scroll Zillow every night fantasizing about owning property? Or do you want to actually own the place your friends beg to hang out in? The only downside is that real estate takes effort. There's upkeep, tenants, toilets, and taxes. But unlike that shiny new crypto coin named after a dog, it won't vanish in your sleep. In the long run, that peace of mind is worth every inspection, paint job, and occasional leaky faucet. 3. Fine art. Because your walls deserve more than IKEA prints. Let's pivot from practical to posh. If gold is your doomsday buddy and real estate is your long game workhorse, fine art is your flashy, unpredictable, occasionally eccentric uncle. Except this one could make you very rich. Art is culture, status, and investment all rolled into one frame. It quietly appreciates, nodding at your sophistication while inching up in value year after year. And unlike your mutual funds, you can actually enjoy looking at it daily without needing a login. Do you think art investing is only for billionaires and turtlenecks? Think again. Thanks to fractional ownership platforms and accessible auctions, you don't need to be Picasso's godchild to get started. Platforms like Masterworks let you invest in blue-chip art starting at just a few $100s. What matters is provenance, where it came from, artist recognition, and yes, buying what's more than just vibey. In the 2022 Art Basel and UBS report, it was revealed that the global art market hit over $65 billion. And in case you're wondering if that painting in your dentist's office could fund a yacht, maybe. But smart money goes into works from artists with historical impact and rising demand. Not every painting turns into a jackpot, but the blue chip ones? They're basically the gold bars of culture. Here's where it gets fun. Leonardo da Vinci's Salvator Mundi sold for $450 million in 2017. One painting. That's more than the GDP of some small countries, and it now allegedly hangs on a yacht. So yeah, art holds value in a dramatic, mysterious, champagne-soaked fashion. If your bank account could hang something on the wall to grow in value over time, wouldn't you let it? Art is the only investment that lets you humble brag and appreciate aesthetic beauty while potentially doubling your money. 2. Luxury watches. The TikTok treasure chest. If gold is your no-nonsense grandpa and real estate is the reliable dad of the investment family, then luxury watches are the fun uncle who shows up to the party late but in a tailored suit and still somehow steals the show. Sure, they tell time, but what they really measure is status, scarcity, and long-term value. Take the Rolex Daytona. The retail price is around $15,000. The secondary market is easily $30,000 plus, depending on condition. That watch is a wrist-mounted retirement plan. The best part is that while stocks fluctuate, your Rolex ticks on, unaffected by inflation, Elon Musk tweets, or the Fed's mood swings. What makes a watch truly investment-worthy is the legacy, limited availability, craftsmanship, and that weird human instinct to crave mechanical perfection. Patek Philippe, Audemars Piguet, Richard Mille, these names are whispered in hushed tones in collector circles and flexed shamelessly on Instagram. Unlike digital assets, you can actually wear your investment without needing a charger. And it's not just wealthy snobs in velvet chairs buying watches. Millennials and Gen Z are getting in on the game, driving up prices and reviving demand for vintage models like the Omega Speedmaster. Even auction houses are hosting TikTok-style bidding wars now. Sotheby's recently sold a 1957 Rolex Submariner for over $500,000. Yes, that's $500,000 for something that doesn't even buzz or play music. A Rolex Daytona owned by Paul Newman sold for $17.8 million, making it the most expensive wristwatch ever sold at auction. His widow said he wore it while racing and fixing his car. So basically, sweat adds value. The kicker is that watches are a portable form of wealth. They're not just durable. They can even become heirlooms that rise in value across generations. But be warned, it's a slippery slope. Once you buy one investment-grade timepiece, you might accidentally start a collection, and suddenly you're timing your eggs with an Audemars. 1. Rare collectibles, the unexpected MVPs of long-term value. You know what's wild? That little childhood obsession of yours? Comic books, sneakers, Pokemon cards might now be worth more than your car. Welcome to the world of rare collectibles, the misfits of the investment world that no one took seriously until they started printing money. Let's start with sneakers. A pair of Nike Air Mags, yes, the ones from Back to the Future, sold for $200,000 at auction. In 2021, Sotheby's sold Kanye West's Grammy-worn Nike Air Yeezy ones for a casual $1.8 million. Suddenly, your cousin's unopened sneaker closet doesn't seem so silly. And it's not just shoes. Pokemon cards have exploded in value. A rare 1999 holographic Charizard card went for over $400,000. Action figures, vinyl records, first edition books, vintage movie posters, and even unopened McDonald's Happy Meal toys can be appreciated like crazy under the right conditions. So, why are collectibles crushing it? It's all about nostalgia, scarcity, and community. Millennials now have disposable income and a deep desire to reconnect with their childhood. Meanwhile, Gen Z is investing in the culture they grew up with. Supply is limited, and demand is emotional. That's a powerful combo, especially when sealed in plastic and slapped with a grading score. And then there are luxury collectibles. Vintage cars, rare spirits, high-end fountain pens, and guitars once touched by famous hands. These are physical manifestations of legacy. The rare whiskey market alone has grown by 564% over the last decade. A bottle of Macallan 1926 sold for $1.9 million. Imagine cracking that open on New Year's Eve and then crying. Some assets scream for attention. Others whisper value in the background, quietly growing, quietly flexing. So ask yourself, are you building wealth for the next big pump? Or are you building something that still shines when the music stops? If you found yourself mentally checking off your closet, attic, or wrist during this read, it's time to take action. Build your timeless portfolio, one gold coin, dusty trading card, or a surprisingly heavy Rolex at a time. And don't forget to tell about your progress in the comments. Smash that like and subscribe button, and let's keep stacking timeless values together. Because real wealth isn't just made, it's preserved.